Hi everyone, welcome to our Lead Squared panel discussion. My name is Kartika and I'm from Lead Squared's marketing team and I will be your host for the day. Today we have a very exciting session. Like always, today we will be discussing how you can grow like a pro with the sales lesson from fintech leaders. So, like the title suggests, this session is mainly focused on fintech leaders and people working in the fintech industry, but it is, of course, open for all, anyone who'd like to learn more. So, let me quickly introduce our speakers to you before we get to the actual session. We have Mr. Aran Murthy, who is the Chief Sales Officer at Axio. Thank you so much for joining us, Mr. Murthy. Wonderful to have you here. If you can just tell us a few lines about yourself, it'd be amazing.
Yeah, hi. So myself, Murthy, I've been in the industry for over 20, 22 years now, especially the banking and the financial services. So I joined Axio about 8 years now. Yeah, it's almost going to be 8 years. So right now I'm managing sales for consumer lending.
Thank you so much, Mr. Murthy. Looking forward to learning from you today. We also have our next speaker, who is Mr. Abhishek Sharma, who is the head of sales at Karza Technologies. Hi, Mr. Abhishek. Thank you so much for joining us. Please tell us a bit about yourself as well.
No, thank you for having me here, and it's a pleasure to be speaking on the same panel as Mr. Murthy. So it's going to be a lot of learning for me too. I've been into sales for almost 14 years of my career in and around banking with ING, fintech companies like Bloomberg, Centify, then worked with the Bureau, TransUnion, Civil, and have been had the good fortune of heading sales here for Karza for last 2 years.
Thank you so much, Mr. Abhishek. We definitely have a lot to unpack here. So let me introduce our final speaker for the day. We have Mr. Vineet Kumar Tiwari. I'm sure some of you all must have seen Vineet before on our webinars and roundtables. But for the people who have joined us for the first time, Vineet is the Assistant Vice President of Sales here at Lead Squared. Hi, Vineet. Thank you so much for joining us today. Please tell us a bit about you for the audience who are, our first timers.
Hi, Kartika. Thanks a lot for the warm introduction. And hello, everyone. It's an honor to share the stage with Mr. Murthy and Abhishek. And about me, so I'm working with Lead Square from last 7 years. I'm trying to kind of like help with my contribution in scaling up the enterprise business. And like I have worked in software, in telecom, in fintech, and like carries almost 16 years of sales experience and learning. That's in short about me. So look forward to have a wonderful session with Mr. Murthy and Abhishek.
Of course. Thank you so much, Vineet. And yes, rightly said, we are all really looking forward for this session. But before we get to that, a few pointers for the audience. If you look to the right side corner of your screen, you'll see a few options there. First one being polls. So that is where we'll be publishing a couple of polls during the actual session. Please do respond to them. We'd love to hear from you. And the next one is the question tab. So throughout the roundtable, if you have any doubts that you want to ask our speakers, please do put it up over there. We will take them up towards the end of the session. And of course, the chat tab is where we can all network. All right. So with that, I will quickly pop off to the back end and Vineet, over to you.
Thanks a lot, Kartika. So we'll start with a kind of overview about fintech as an industry. So some pointers I just wanted to share for the audience here. So Indian fintech industry, the market size today is approximately $60 billion and growing at a CAGR of almost 21.1% every year. And it is expected that in next 7 years, it's going to be a kind of one trillion industry. So with these pointers, I would want or request rather, so Mr. Murthy, to kindly share your view and like about fintech as a segment, as a market. Like how does it appear? Like how was 2022, and how does you foresee about 2023 in the fintech as an industry?
Yeah, see, the fintech. I mean, if you look at having worked in the banking segment with the conventional bankers and having worked in the fintech, so there's a huge difference between what we did in the past and what I'm doing at this point of time, right? So India, if you look at it, especially in the technology side, the fintech side, I think probably will evolve as a global leader in the coming days, right? So the amount of work that has gone in, especially on the UPI, the payment gateways that we talked about today, or the digital marketplaces, and the digital footprint that is going to be available to us for any kind of lending business, this is going to be huge. But how are we going to utilize this data in terms of delivering the risk at the best possible way is something that is still in the evolving stage. I don't think we as an ecosystem are completely convinced today that we have to partner with the conventional lenders, the banks, to be precise, that they also understand this data well and they also consume this data in a way that can deliver a superior product to these customers, or a customized product to the customers. So which I think 22 has been an immense learning for the entire ecosystem, and a lot of companies in this lending space have evolved. So they're still learning. I don't think the learning process is going to end anytime soon. There's still a lot to evolve. I think this will continue, and then they're a far better product in terms of customizing a customized product that the customer requires. A flexible product that the customer will require is going to come up in the days to come, right? So the data is going to get richer. The digital data, what today we are using, is going to get richer and better data, so that we have far more better products to deliver to the customer. But as you say, the growth for Indian fintech story is still big. I mean, the picture that we are seeing right now is quite not significant. So we will start seeing. I mean, somewhere I read this about 2.1 trillion kind of a market size by the 2030. Yeah, I think that's quite possible. Okay, so I think we all have to work towards it. So it's definitely possible. So it's quite positive towards that.
Thanks a lot, sir, for sharing these insights. So Abhishek ji, if you, with your experience and your learning about this industry, if you could just share your overview about this industry, that like how do we see this industry like growing, and also if you could include some of the pointers, like say if you take like how the lending tech especially is emerging.
So thanks, Rohit, and thanks, Shimosita. One of the things that we have seen in the last year or so, the conversation has shifted away from functional capabilities to tech capabilities. And that is, if fintech in India has to really realize the potential that it has to offer, it has to go down beyond the tier 1, tier 2, tier 3 cities and penetrate what in the parlance that we call Bharat and not India. Because the challenges that you see coming from a tier 4, 5 or semi-rural, semi-urban areas is that the handsets are not standardized. So by that extension, their browsers are not standardized and they can't support the video KYC as a capability. And this is just, I'm using video KYC as an example in terms of where the limitation of the end devices put a constraint on your customer acquisition. Because so some of the conversations that we're seeing now is coming about the tech side of things. So less of fin, more of tech in the lending technology. Can you support something at very extremely low bandwidth? Can you support something at a very low resolution? Will that still qualify, or will it still pass the smell test in terms of avoiding fraud? So that is those are the newer challenges that we are seeing now, because I believe that there's also some kind of saturation that is coming in the urban centers, hyper competitive space, too many players, and it's also the audience that everybody wants. So the long tail still needs to be captured, and I think that's where the shift in the conversation is. So that's the new, and that's something that we didn't hear in financial year 2021 at all. That's something that we are hearing now. So that's one of the shift. The second is obviously the focus has shifted away from pace of user acquisition to cost of user acquisition, in terms of am I acquiring the customer profitably? And I think that starts from the very top in terms of the kind of marketing dollar that you're spending in terms of promoting and bringing user onto the platform, and then over a period, and it gets counted from there on, because previously the entire user journey was being looked at, the profitability was being looked at once the user lands on the platform. Now everybody is questioning the fact that how am I getting the user to come onto the platform? What's the kind of spend that I'm doing that is beyond the beyond the space where he lands on the platform and engages with it. Those are the two areas that I would like to highlight.
Sure. Thanks a lot, Abhishek ji. So with this, I mean, understanding this like market and all, if we are talking about, the limitation on the technology side. Now, some few things that we would want to understand from the pattern or the behavior on the consumer end. So, Mr. Murthy, I know, like, request you if you could throw some light around, the trends around the behavior of the consumers, maybe around spending pattern or stickiness, like about the product, or even the distribution or the demographic, like related statics. I mean, like few pointers onto those lines.
Yeah, so the consumer pattern, I mean, or consumer behavior, especially in the lending space, have, I mean, transformed from what we have to say, right? I mean, if you talk about maybe 10 years before, if you have to borrow a personal loan, how the situation used to be, right? So let's forget about a private bank. Private bank and the NBFC is still way much faster. But if you have to go to any nationalized bank, so you could imagine the system of running around for getting any kind of loans with a nationalized bank, right? It used to take days and months, right? So I'm talking about months in some of the cases. So I've worked in microfinance and I worked in other banks. So I understand. I've seen it very closely. What kind of a TAT that used to apply for borrowing to a customer. So many customers actually shied away from trying to meet these bank managers or officers to get any kind of borrowing from them, right? So with technology now being so close or in their fingertips, so the customers are looking at convenience and a faster service, right? So now, I mean, people are okay to pay that additional cost for the convenience and services, but the demography is tilted towards the younger generation. The younger generation today are okay to buy that cost. I mean, take that cost for this convenience, but definitely not willing to wait for this long and go through this kind of a service hassle that one has to go through, right? So this shift is a major shift. So, but we have seen this trend. The demography is again maybe in up to 30 or 35 age bracket is what we see concentrated at this point of time. But the older folks still don't trust this ecosystem. Okay, they still feel that I think you still have to meet somebody in person to borrow lending. For them, borrowing is just not a simple act of purchase. So it is a relationship, right? And that's how they pursue, right? So as we move forward, I mean, you will see more and more younger generation participation, and maybe the trust by the older folks also should come in. So this might take some time, but as we evolve and move forward, this will definitely happen. Is what I can see that right happening, and I mean today borrowing for anything and everything is possible. It's just not like one kind of a term loan. It can be line of credit. You can start borrowing even from 500 rupees, right? So that's the kind of ticket size, that kind of flexibility is available. But this has to still evolve. I don't think we have gone to a space of saying that customization is possible. I don't think we have gone to a stage of customization at this point of time. So this will evolve as we move forward to offer different product for different type of customer at different stages of their duration, right? So that will happen. So at this point of time, most people, we see them, convenience and a faster TAT of the product delivery is what people are looking at, right? At least the demography that we are concentrated at this point of time. And also, these are concentrated towards a smaller ticket size of borrowing, not towards a larger ticket size, because the risk also should, age. I mean, risk learning is also very important here. I mean, being in the lending industry, risk plays out everything, right? So that is still in the testing phase. So it might take some more time for the entire industry to learn and then probably evolve from there. So that is my take on the demography.
Thanks a lot, sir, for explaining and for like making all of us understand about this, especially from a B2C perspective, because when we're talking about the behavior, I mean, especially the pattern of the consumers, like how borrowing is basically how the borrowing ecosystem look like. But now coming to the B2B part of it, So Abhishek, we would want to understand, like what are some of the trends that you could see or you could see as in 2022, foresee as in like 2023 and going forward in the B2B space. Like what would be some of the selling trends there?
So I think the monetization of the user base is one of the while it was being talked about a lot in FY22, the pressure on that in this financial year, and I think subsequently going forward will be much higher than what it has been, because the good dollars have been spent in building the customer base. So if you look at the largest players in the payment ecosystem, for that matter, and given the fact that the government is still making it difficult, still want to keep UPI as a public good. If you built a business and have acquired customers on the ease of payment on the built on the UPI rails, at some point of time it still needs to compensate for the cost that you've incurred. I think that's going to be one challenge, and we are seeing more and more players, and for the want of anything else, lending seems to be the lowest hook in terms of anybody who has a customer base wants to now become offer that customer base the ease of uh, some sort of lending, either via ease of payment using BNPL, or by having access to cheaper source of funds by building the right kind of strategic fitments, right? And so we would see uh, more of super apps being coming in terms of players who have sizable audience, may or may not necessarily be having a directly financial impact, but bringing them together. That's what something like Tata Neu has tried to do, and I think even other large conglomerates are making strides in that space to either create a super app for retail customers, but you might also actually end up seeing super apps for MSMEs. So where if I'm a large, say for example, it will not be far sighted for me to imagine a situation where Hindustan Unilever might say, okay, here are my distributors. I want to create a lending marketplace for my distributors, right? May not necessarily be HUF, but HUL or somebody else will definitely try to do that, and we are seeing the seeds for that already being sowed in the ecosystem.
Got it. Thanks, Abhishek. One question which comes like very naturally to all of us is, when there is a growing ecosystem, so there will be obstacles as well, right? And of course, I mean, like there would be alternates, there would be like arrangements to overcome those obstacles. But just wanted to understand from starting from the obstacles which are coming because of certain say, I mean, regulatory aspects. So Mr. Murthy, if you could just throw some light on from from a regulatory perspective, I mean, like what are some of the challenges or obstacles which most of the fintechs are kind of facing now?
So many people have asked this question. So how is regulators going to make it more challenging or difficult for you people to continue to lend? But in my view, regulators are somebody who's going to build the confidence in the system. Okay, so without regulations, I don't think a lending system can develop or even build that trust in the society. So it is the regulators who actually protect the interest of your data, the customers, the lenders, both put together, right? So, I mean, calling it a challenge is not the right word. So I would say they are the one who's going to develop the confidence within this whole ecosystem for us to evolve, right? So if at all a regulator is bringing certain things, of course, there is some data which is backing, if at all they are posing certain, making it more challenging for us to, lend or survive or exist in the system, right? So they are enablers, of course, and they are also protectors. So I would say, I mean, the regulators should now start focusing on bringing the fintech and the conventional players together onto the same common platform, so that both can partner and work towards evolving to a much larger ecosystem. Okay, so that's the need of the hour at this point of time, right? So we have, I mean, Abhishek did mention, right? So we have acquired customers. We spent enough, we put in a lot of enough dollar here at this point of time. So it's time that we monetize that, right? So regulators are also watching. I mean, how long you keep on, burning money or burning cash in acquiring just the customer? But somewhere you should start developing or demonstrating a model which is more sustainable in a longer way, right? And that's what the regulators are talking about today, right? So they're talking about data privacy. They're talking about making sure you build whatever you build within certain frame, which is not going to pose risk to anybody on both the side, the borrower as well as the lender. So that is something which is essential, and I don't call it challenge personally. So I think it is essential for us to have a very strong regulator. I mean, you're seeing across the world today what's happening to the banking system, right? So at least in India, we don't have that problem. I mean, I appreciate these kind of initiatives that our regulators constantly keep taking, and they're on a constant watch what's happening in the market. That's very essential for an economy to stay stable.
No, like absolutely true, and thanks a lot for changing like perspective as well.
Yeah, so
Like
very, I'll just like to, if allow me, I'll just take 30 seconds to add something on this
please,
one. And I am completely in agreement with what Murthy has shared. I don't think anybody's worried about the regulations. I think what really impacts us is the clarity on the regulation, the unambiguous nature of it. So you know exactly what is allowed and what is not allowed. The problem comes in when we have various shades of gray. And I think if we all know, and I think as responsible business leaders, right, people who are trying to create ethical, long-lasting businesses, we all know what we need to do. It's just we need the clarity. Okay, this is allowed. This is not allowed. Uh, and I think everybody can align their strategies accordingly. India is still a huge market to capture. I don't think I think anybody believes in their mind that they need to do anything. Uh, at the on the left side of the margins to acquire customers. There's huge potential.
yeah,
But
Abhishek,
add
please
another
go
point.
ahead.
When you talk about obstacle, I see a potential threat today is online frauds and scams that's happening. Okay, I want regulator intervention to protect consumer as well as the lender in this. Okay, today both the parties are affected, right? And it's very difficult to identify what's coming, right? So we don't have a preventive mechanism at this point of time, right? So any kind of post-mortem exercise is very difficult to deal with the cyber costs. I think the Ministry of Information and Broadcast should work very closely with the cyber security, develop a very strong system that both parties are protected. Okay, and that's what regulators should start talking right now. I think that's missing because I've seen this myself. So it's not easy for a scamster today to penetrate into the ecosystem and commit any kind of crime and just get away with it. It's very easy, right? So I think we have to build certain guardrails around it. The regulator should play a very strong role in protecting the interest. So that is one of the obstacles that I see at this point.
Yeah, and a lot of thumbs up coming. Also validate that whatever statements you both have made are kind of in agreement with everyone who is there as an audience, and they are kind of like accepting it with whole heart. So Abhishek, with this, from the H2 of 2022, we have also seen kind of like winter in the funding ecosystem. So what would be your take on that? I mean, like, do you see this also? It's because these fundings, it acts as a fuel, right? And in the growth of that complete ecosystem. So there has been no kind of like investors are a little shy or were shy. I mean, they may open up probably maybe in the second half 2023, but till now that shyness is still there.
See, Ved, I would slightly disagree with the assumption that there is a funding winter. I think the funding is still available. I think it's available for the right ideas at the right price. I think what we are seeing is that the bubble is settling down on the froth in terms of the valuations are being more reasonable out there. So you might, in terms of the headline numbers, it might seems like that there is a squeeze. The number of checks that are being written are definitely gone down, but it's not that for a right idea and for a right product fitment that people are backing away. They still believe there's a potential, and in the recent days we have seen funding being made accessible and plays across the spectrum, not just fintech but even edtech companies are getting the funding provided. There's a viable solution out there. So the spray and pray approach has gone out of venture capitalist funding. So I think that is the one thing that has happened, and people are being more prudent. But having said that, it ties into what I earlier said, that that the focus has shifted away from pace of user acquisition to cost of user acquisition, in terms of am I acquiring the customer at what cost, and what is the contribution of that incremental customer acquired to my PNL, be it at the top line level or be at the bottom line level, whichever is the appropriate metrics for that particular industry.
So Abhishek, in continuation to this, so I'll request for another thought to be given, where see so being a sales leader, right? Like what are some of the standard sales say practices or cadence or elements that you have set or you could advise to our audience, which kind of will work in terms of say lowering the cost of acquisition or leading to a higher CPL or CPA, all that.
So, see, we deal with majority. We're predominantly a B2B play, right?
Mm-hmm.
So in our conversations, while for my customers the CPS CPL are not really the relevant matrices, because the universe is much smaller for us to target.
Mm-hmm.
But what we have seen is, and what we've learned from our customers, is that the CPS CPL needs to be, it's about the clarity in terms of where am I spending that money, what is that money coming, where is that money coming from, and how does it contribute down to so every single penny is now getting questioned. And I think that clarity from the top down makes a lot of difference in their focus. In the business that impacts us directly, what we've seen is worked very well for us is again the same clarity in terms of which industry who's responsible for. It does pose a bit of challenge for us. For example, how do we classify a Paytm, right? Or is it an e-com? Is it a payment? And what are the regulations that apply to company like a Paytm? Does it come under the payments ecosystem? Does it come under the e-commerce ecosystem? Does it come as the marketplace ecosystem? Right?
Mm-hmm.
So some of that I believe is super critical in terms of both knowing the audience that you're going after, as well as defining what are the matrices that at the end of the year you will be evaluated on.
Sure. So in continuation to this, I'll again so I would want to request Mr. Murthy to share his thoughts. Like in addition to this question, also we would also want to understand about some of the strategies or some of the KPIs that you would want to track to ensure that whatever goals has been set for the team, like how the team is kind of close and on track to those goals, like some of the best practices and all. So Mr. Murthy, if you could highlight this for
Yeah,
us.
see, in the fintech, as I said, it's an evolving world, right? So there is no right thing or a wrong thing unless we experiment it, test it, and prove what we are trying to do, right?
Mm-hmm.
So we have to reassure our team that not everything that you are doing is right, or not everything that you are doing is wrong, right? So most of the time during the sales discussions, we end up just talking about certain targets, right? So in the fintech world, that's not how it works. So in the banking, yes, it makes sense. You're running behind a target. You're running behind acquiring certain size of customer, and that's about it, right? So this is standard, cookie cutting approach. But in the fintech world, we have to keep on experimenting because nobody has a right answer here. I don't think there is any industry expert who can tell, okay, this is the right thing to do or that's the right thing to do, right?
Mm-hmm.
And every single organization have a different strategy of their business. Their businesses are very different. Though it is lending, the way they acquire the customer, the way they deliver the product, everything differs. So, you can't just get somebody from a different, fintech and ask him to start working here from tomorrow. You can't deliver. It takes 3 months to settle down, right? So I think we have to reassure our team, that failing is not a problem. We should appreciate failures.
Mm-hmm.
I think we should give them the opportunity to, what did you learn from the failure? What did you learn from the initiative? People stop taking initiative if you don't do that. Okay, so I think we should, I at least in my team, I continue to push my team to take initiative and take the experimentation. It's okay to fail, right? And I think that kind of a reassurance has to be built within the fintech sales team, especially for them to learn and then evolve from there. Or else you're not going to invent anything new. You'll continue to be stuck around the same round and round, and then you end up being just there. So for you to discover something new, you have to fail. So let the team fail and let the team learn and let the team, have that assurance that this is the team that I have to be, which will allow me to innovate, which will allow me to explore. So that kind of a initiative is very important.
I'm just want to add a couple of things to build upon what Murthy has shared. It's like in fintech, we are actually driving a car while we're building it, right? In legacy business, we have past histories. Banking, for example, the conventional banking has been has been there for centuries. So you have a historical chart that you can look, and the fortune tellers of the world are there to look into those charts and predict the future. We don't have anything like that in fintech. Till 5 years ago, something like a UPI didn't exist, right? So there's nothing that could have predicted the explosive growth of or the adoption of UPI as a platform. So yes, while we have to encourage our team to take risks, but also have to have a very sound risk management system in place, that you know that when are you shouldn't be putting more money on a losing hand, right? You should be absolutely clear about, even while it's an experiment, the matrices need to be very well defined. That this, if A, B, C, D happens, then going to invest more in this particular approach or in this particular idea. If it doesn't happen, then I'm going to look at plan B, C, D, E. I think that is going to be super critical, and I think that is going to differentiate between organizations that survive the funding winter, as we say, or the organizations that keep on spending more money because they're just married to the idea. I think that's where we need to differentiate between the two.
Thanks a lot. I mean, so this was super helpful for a lot of our audience. And if you could see, Abhishek, there is a continuous thumbs up which was coming in, so that validates as well. Now, one aspect which I was thinking actually. Now, any organization when it starts, it comes to scale A, and from there it has go to scale B. Now, in the process or in that transition of moving from scale A to scale B, like most of the organization, they look at the top line. So what would be your advice? I'll start with Mr. Murthy again. That what would be your advice in terms of, if you have to make an organization, say, we have to like look at two aspects. I mean, both aspects. Okay, it's like one is the cost optimization, and second is to maintain that pace of growth. So how do we design this? If you could help us understand.
See, if you look at it, the learning phase is, I mean, while I can say we are still learning, right? But somewhere the learning phase has to end, and then we have to start showing the model that we are working, or the model that we are all involved here, is a sustainable model, right? So given that point, I mean, you have already got to a certain scale, but your cost is just definitely not making any sense, right? So at this point of time, you will start optimizing it, right? So you may have to control your aggression in terms of growth, but you have to work towards a sustainable growth plan, right? So this is when you will start exploring many other means which can actually bring a sustainable growth, maybe in terms of partnering, in terms of integration, in terms of cutting certain costs which we are incurring today. So that's the approach that we need to take. If at all you have to grow from A to B, I think you got to A, which is fine. You had the luxury of not being hard pressed on the cost. But now I think it's time that we all need to understand one fact: it's no more available. Okay, so the next jump is going to come is a sustainable growth plan, a proven model to the world that this is possible to deliver. Right? If we continue to start saying I'll keep on absorbing funds and I'll continue to growing at an aggressive pace, and it is not sustainable, is not something that will be appreciated by the rest of the community.
Thanks a lot, sir. So Abhishek, would request your points, your point of view, your suggestions as well on this.
See, the only difference that I would change from Mr. Murthy's answer for what is relevant for the organization or the industry that I'm part of is the stickiness. I would just replace sustainability to stickiness of the revenue, because in the tech side, right, the entry barriers are low. So you have to make sure that the clients that you onboard stick with you. So that you can realize the full potential. If there is a churn that every 6 months you're losing a customer, then you can't really realize the full potential of that particular customer. I think when we did our own internal analysis, we realized that the real hockey stick curve of the revenue of the customer actually starts coming in 15th month onwards. So you have to make sure that you go through the hard yards in the first 14. And the second thing is that when you're building a sales strategy, you have to look at what is the behavior that you want to incentivize. Do you want to incentivize incremental sales to the same customer? Do you want to incentivize incremental number of customers, right? Once we differentiate that, then we have to make sure that we have systems in place to measure that, because there's no point in designing a KRA KPI that cannot be reliably measured. And I think I have, in my 14 years of sales careers, I've been part of systems where we have designed a KRA KPI, but at the end of the day, at the end of the year, we realize that we do not have a reliable metrics for it. So that just takes away the whole effort. I think so. It has to be top down. When you're sitting down and said, okay, this is what I want to see at the end of the next year. This is the behavior I want my sales team to demonstrate. And I think sales guys are smart in the sense they know it. They know the game to play. So if this is the incentive, then I'm going to work towards it. So we are all smart that way. That we know when we know where the carrot and the sticks are.
Great, thanks a lot. So one more question. I mean, so this will be a continuation again for this the answer that you laid out now. In designing this process, when we're designing a sales process, and I would start with Mr. Murthy, that so one is the process, like whenever we design a sales process, so two things are kept in mind. Okay, one is around the people, the second is around the systems. If you could like decode both these things, how these two are interrelated, how this work will help the audience and us.
Yeah, can you just repeat the question?
So when we design a business process or a sales process, so we keep two aspects into it. Like one is the people who are going to be, or like the execution one, and the second is the systems that are going to be used to execute this process. So if you could interrelate and help us understand that how like system and people, both can be interrelated. How do we define these things in a business process?
Yeah, so you're asking me a question. How do you work with the systems while you have the people's executing in the field, right? So yeah. So today's one of the challenge that we see is working with the technology and working people in the front end, right? So the expectations are very different, right? So most of the time, the technology is, again, it's dependent. So whatever needs to be developed, it takes its own time, and many times it doesn't come correct. So you have all of this challenge that the front end has to handle, right? So the alignment and the clarity, that's very important between both the team. So which has to be set, at the time of initiation itself, so that both work together, or else the friction will continue to happen between both the team, and then we don't end up producing the required result. Okay, and which I'm sure in most of the tech world or the organization that we all work today is foreseen, right? And that alignment is something that we have to bring very close up.
Thanks a lot, sir. So Abhishek, we have conducted a survey. It was a sample survey. Randomly done on certain, I think, number of the customers that we have on that only, and we found one like output as nearly 53% of the leaders, they do like monthly review of the sales operation. So is it the right cadence? B, if you as a leader, if you have to share your experience on this, that how do you follow your cadence of like review of the process, operation, sales teams, etc. Like what would be your input?
See, with the I don't think there is a sacrosanct number of a monthly or a quarterly cadence. I think it's going to be a function of when you have the reliable data available. If you have a very high accuracy data available on a weekly basis, I don't think, and if again it doesn't take away. I guess it has to be a balance between doing the business and measuring the business, right? So if I'm spending more time in Excel sheets and looking at the numbers than actually going in front of the customers and doing the magic that I'm paid to do, then I guess it beats the purpose, right? It defeats the purpose. So it has to be a balance between the two. While monthly is a good frequency, as good a frequency as any. If you have the data with the granularity that you need to introspect, I think it's again. I would reiterate it. I would look at it in terms of when I have a good quality, reliable data available for me to take a look at it and measure my business reliability. I think that's how I'll decide on the cadence. Plus, is going to be a balance between am I looking at all the I's and T's? Am I missing the forest for the trees? So that's going to be. Do I really want to get that kind of granularity?
Sure. Thanks a lot, Abhishek, for sharing this. So, Mr. Murthy, if we have to set certain, say, milestones in fintech, say, and especially for the audience, like there are a lot of fintech leaders as well in the audience. So for their understanding, if you have to give your suggestion or inputs, that like what sort of milestones are essentials that we should kind of consider. Uh, so like your
I
input
think,
here.
yeah. So I think one is building trust in the ecosystem. That's topmost priority, right? So if at all you talk about the future and stuff like that, one is, make sure the system is trustable. Okay, if I have to borrow money from a fintech lender, it has to be, you have to, there has to be some trust that has to be built. Second thing is the customization of product. You can't have one size fit everyone, right? So we should start thinking about how do we build customized product uh, to any customer. That's very important, because even today I don't think we have customized products. We are just still trying to give the typical term loans and maybe line products. That's about it. So that is something that thinking process has to change, right? So the product that we're trying to build has to be futuristic. It has to be customer friendly, user friendly. And yeah, so I also mentioned, right, so it has to, you should also start enabling more customer to start participating in the ecosystem.
Thanks a lot. So Abhishek, your thoughts on this?
See, in terms of, I completely sync in with the idea of innovation on the product side. What we right now we're seeing, other than BNPL, right? We're only seeing an extension of the conventional banking products being offered via digital channel. With the term loans are there. We have a recurring deposit product. Why not I have a daily deposit, daily refund of the loan? Why do I have to wait for a month to start seeing the money? If I'm a daily earner, uh, why not repay a part of my loan every single day? The thing is, there's substantial amount of friction, substantial amount of cost for any e-natch or the transactions to play in. But wouldn't that be an innovation in terms of looking at offering products with that kind of uh, frequent flexibility to customer? I'm completely in sync with what Murthy sir shared. Is that the customers today need that flexibility, and they expect that flexibility because that's what they're getting it from other experiences in the fintech world. For example, the ease of opening an account, the ease of making a deposit, the ease of making payments, for example. They're like why lending continues to be slightly, or borrowing continues to be slightly more challenging there.
Great. No, thanks for this, Abhishek. So my last question to both of you, one by one, we can take. We can start with Mr. Murthy. Like we always, when we have a session, we try to see after this, that the conclusion should be on the future, right? So how do you see exactly the future of fintech industry in India? I'm sure like a lot of time and a lot of articles are also there around it, but no, it is like worth to know from a leader like you that like what are your views on this basically, that where are we heading to?
See, if you honestly ask me, the banking services or any even borrowing services. Okay, so when I mean to say banking, it's both, any kind of banking services that we all utilize today. It should be similar to a booking a cab today. Okay, it should get to that level. Okay, I don't think people should hesitate, or when you need fund, you should just open your app and should be able to get what you want in few minutes, right? And that is the future that we should all aspire to. Okay, I don't think, I mean, yeah, we just talked about the products are pretty much conventional product. We're just trying to deliver in the digital format, right? So we're still a long way to get to understand the customers better. Okay, so we have not understood that. So customer behaviors we are understanding, but what does the customer wants are still not understood well, right? So someday I think we should get to ease of delivering the product in few minutes or seconds, like just a gap. So that's the transformation that we should all aspire for in the future.
Thanks a lot, sir. So Abhishek ji, your thoughts please on this.
See, the way I see the future evolving is that we would have fungibility between the various silos of finance that we have today. For example, and I'll just elaborate for a moment on that. When I'm talking about my mutual funds or my equities, right, that portfolio, my asset side, uh, doesn't it's very difficult in India right now to borrow against securities, right? If you have your demat account in one particular client, you go to your bank, marking a lien and all is a nightmare. And I think we will see evolution in terms of making the membrane more permeable in terms of flow of information. I think that's where the future holds. It will unlock a substantial amount of potential. An FD backed credit card. Why should I have to have the FD with the same institution that where I'm actually taking the credit card from? Why not should I take it FD from somewhere else? I think that's what, as we move forward with both tech as well as better clarity on the regulations, you will see more of these innovations coming in, and I think that will give another lift to what already is a hockey stick curve in the Indian fintech story.
Great. I mean, this is so insightful and so interesting as well. Thanks a lot for bringing this up. So thanks a lot for this wonderful session. Now I think this is the time for the Q&A. So Kartika, if you could help us with the questions.
Definitely. Thank you so much once again. So let me just take up our first question. It is by Mr. Deepak. He asks if there's any product which you are seeing doing well in monetizing users. I guess you were talking about embedded lending. Can you throw some light on it?
Yeah, so I have this. I mean, I think the question is any product. Yes, I think the buy now pay later product, which is there today. I think the monetization is pretty closer. I think we are doing pretty well. Not just us, in even many players in the market have rightly understood how to monetize those products. So I think that's coming up well.
All right. Abhishek, if you have something to add to that.
No, I think the BNPL has opened up imagination for people, to be very honest. I think as a tool, it has, and the younger generation has really taken a fancy to this product because of its flexibility that it offers. So I think that, plus I believe we will also see growth in the embedded insurance space as well. I think that's the natural progression, evolution of typically we understand finance only as lending, because that's the area that we are more comfortable with. But I believe insurance is going to be, and I think there's already substantial amount of innovation happening. I read about certain insurance players able to offer issue policies on WhatsApp conversation. I mean, that's cool, right? That's how. So as Murthy sir was mentioning, finance interacting with financial institutions should be as simple as booking a cab, and I think we are progressing gradually in that direction.
Hopefully so. All right. Thank you so much, Mr. Deepak. I guess that answers the question. So to the audience, okay, we have another question here by Mr. Pratik. He asks, what are the key distribution models that are proving well for fintech companies? Mr. Murthy, if you'd like to take that.
Yeah, so distribution models are too many to opt for. Okay, so but which is the best model that best fits our business model is something that we can choose, right? So there is nothing called key distribution model. So you know that, I mean, in the digital space, what kind of how digital marketing or the other options that's available today, but everything comes with a cost, as I told you. So it is the business model which will pick what is suitable for different kind of product offering that's available for them.
All right. Mr. Abhishek, if you have to add anything.
Yeah, I am only guessing, and I may be completely wrong here, but what Mr. Diwan is looking at is probably the B2C facing businesses and the distribution channels for that. I'm completely at sea in answering that question because most of my life has been about B2B play. But just to add the flavor of B2B here, I can only say that when we look at our organization, the distribution channel that we're using, we're actually channel agnostic. We have direct sales team, we have we have partners, we have resellers and alliances and partnership, and also tech integration. And so we're agnostic to the channel that comes to us. Anybody comes up with a new innovative idea, I say, look, this is the if you work with us, this is the kind of reach that we can get you. This is the kind of, so we that's the luxury of being a small company, that we can actually sit down and say, okay, fine, we will be flexible with contracts. it's about the clarity of your own interest and the clarity of your business interests. Protect what you have built, and as long as the that we are not stepping onto each other's shoes, I think we are open for experimenting with various ideas.
All right. Thanks again, Mr. Murthy and Mr. Abhishek. So, to the audience as well, please do keep the questions coming. Meanwhile, we did get, I think, 2 or 3 questions over the email as well, because people could not join us today. I mean, understandably, very busy month. Okay, so I will take up the first question that we got through the email. It says, how do you see the relationships between banks and fintechs evolving over the next few years? Mr. Murthy, if you'd like to take that up.
So yeah, this is a tough one, right? So I mean, in fact, I did mention this. The regulators should play some important role here in marrying the fintechs and the banks well, right? So today the thought process are quite different between both these organizations, right? And many of them don't even agree or buy in the fintech ideas. Okay, especially I'm talking about the public sector banks. Private sector banks are still better than them, but they also don't completely agree the way fintech is evolving, right? So I think it's we have spent good amount of time already in trying to bring the banks on this ecosystem, but somehow it has not really worked well, right? The very limited partnering that's happening, despite even RBI also in fact took some initiative in this to bring them together, but somehow it's not kicked off very well. But I think it should sink in sometime as we move forward. Once we have a proven model, once we start showing a sustainable model to the rest of the world, I think the banks will start joining in the days to come.
Of course, hopefully that's the way forward as well. Mr. Abhishek,
No, I don't think I can improve on the answer in any shape and form what Mr. Murthy has shared. I think that's the uh, I am completely in agreement with that. I think it will be under the aegis and the watchdog of the watch eyes of the regulator. And I think we are moving in the right direction. I think we are building the right kind of guardrails. So it might seem the pace might not be to some liking, but I think the larger interest, and I think in India, and what Mr. Murthy touched upon, fraud continues to be an issue. So we have to make sure that we plug all the loopholes before we go all out. And I think it's better to be in this industry at least. I think all of us would agree that it is better safe to be than to be sorry.
of course, definitely. Vinny, do you want to add something to this? Uh, or
No,
if we can, yeah.
there is nothing that I can add further on to this. So Mr. Murthy and Abhishek has like clearly and like so I cannot do any improvement. So I'm fine.
All right, thank you so much. So I think we can take up one more question that has come in. Uh, all right, so the next question goes like this: what indicators, some innovative areas that fintech can look into to understand credit worthiness of customers, especially for a lower tier customer? Some kind of indicators that can be, taken into account. Mr. Murthy?
So this is something to talk about the alternative data usage for underwriting, right? So, I mean, if you look at it, yeah, I think the embedded PLs that we are all working today is something that is working in that direction, right? But I don't think we are in a situation to say this is the right one or that's the right one, right? So we still have to test out these and then arrive at what is the right one. Okay, even I do not know the right answer for this, so we're still testing out. So maybe we'll have the answer at sometime later.
Of course. Abhishek?
And I think I'll add something. This is coming not from any wisdom, but from experience in talking to a lot of customers, because that is a segment, and I think whosoever the other question has touched a nerve, because this is we typically look at lending based on banking, credit reports, or income statements, and the when you move down the income chain, right? Uh, Not everybody has access to bank accounts. Not not as everybody has credit history, and that it becomes a problem. Now the alternate data that we all talk about, even that alternate data sources dry up when you go down to that particular value chain. So it's not that it's not like alternate data is not air that it is present everywhere on the planet Earth. It also follows the same path as the regulated data. It's only the only thing, it adds a different dimension to the see. Alternate data is not a panacea. It's not a pill that will solve or will make every single problem go away. It doesn't work that way. It cannot work that way. And given the industry that I am in, the number of scores that keep coming in, and the kind of data sets that everybody is building, I mean, I've got at least 20 conversations happening every month that, hey, I've built a new score or a new way of looking at it. You can't go and backtest it. And I think anybody who's going to put hard money lending on the basis of a particular score would want to go and backtest it, that does it really work. And sometimes they break that particular smell test. And again, some of the sources of this alternate data didn't really exist about 15 years ago. So you don't even have a long, like, for example, Facebook wasn't there when I was graduating out of my engineering college, right? Uh, uh, Twitter is about 10, 12 years old. The amount and a smartphone was unheard of when I was leaving my school. So you don't have that kind of history. So people who talk about all data as sometimes have to understand that even all data has its limitations. It will not replace conventional database lending. It will only help in risk mitigation. It will only help in making your risk quantification more robust. uh, Somebody who sells, and I'm not using it, I'm just using it as an example, but somebody who sells a vada pav on the side of the street, if he's receiving payment on UPI, you can use that banking data as a source. But if that guy is dealing in cash, then you do not have a visibility on a reliable data source, and then there's nothing much that you can do about it.
So, I mean, to add to that, I mean, if we are not, utilizing the alternative data that's available, okay, I mean, as Abhishek said, there's limitation to that, right? So then maybe we should look at alternate models. Okay,
Yeah.
so if you talk about alternate models, about 15 years back, the group lending format, which happened in the microfinance industry, if you look at it, which actually uplifted a lot of people who didn't have a credit history. Okay, today a lot of these women's have created their bureau score, right? So that's one of them, but that's not data. There was no data. I mean, that's really physical hard work, right? So you brought people together and then you started collecting the data. So maybe that's one of the alternative data which is proven, right? So going forward, since now that we are relying more on the digital data, how much of that will enable us, we do not know, right? So there is some limitation to that. But if that doesn't work, then maybe there's something else. Can we bring people digitally on online and then try to bring in something like that? We don't know. I mean, we'll have to test all of these cases.
Of course. I think we have actually come to the end of our questions as well. So, to the audience, I hope everyone had as much as insights to take in as me. Thank you so much for joining us once again, Mr. Murthy and Mr. Abhishek. Wonderful session, truly wonderful session. And for all the people who unfortunately could not make it to the session today, do not worry, we will send the recording over to you. And if you have more questions that you want us to take up, please do share it over the email, like some of you have already done. We'd love to take them up as well on the line. And of course, once again, I just wanted to thank our panel. I know that it's a very, very hectic, busy month, but we were fortunately able to make it on the panel. So thank you so much, Mr. Murthy, Abhishek, and Vineet, for taking the time out and joining us today. And to the audience, of course, for the questions and the thumbs ups and all the other interactions that we've had today. So, with that, I think we can meet in another session that will be coming up very soon, of course. Yeah, so any closing remarks from any of the speakers? I'd love to hear.
Yeah, it was a good session. So I think we should have more of this for at least knowledge sharing. I think we should bring more on the panel to share their information, because this is a continuous learning process. So it doesn't just end at this. So please bring more experts so that we also be audience in that kind of a session and then learn from people.
Yeah,
That
I'm
would be
definitely walking away wiser. So uh, I guess that is the right box ticked for me.
Of course.
So thank you
Yes.
so much for having me with you.
Thank you so much,
Thank you,
Thanks a lot,
guys.
Murthy.
Murthy sir. Thanks
Thank
a lot,
you.
Abhishek ji. We had a wonderful discussion today. Thanks a lot for your time, sir.
Thank you.
Thank
Thank you, everyone.
Thank you,
Thanks,
everyone.
Karthika, for
Have a
organizing.
wonderful weekend and the rest of the day. Thank you so much.
you.